Us now is Hon Cheung. He is Managing Director of Singapore at State Street Global Advisors. Hon, thanks for coming in. Right, I want to get back to the first story here that we were just looking at. And, you know, is it the case that we have reached this sort of critical point where equities are now definitely more greater value than US government debt, to say the least?
Well, I think there's something to be said about attractive valuation levels of equities, but don't forget there's still a lot of economic concerns out there. So from a total wealth perspective, I think it's still sensible to have some, sort of low volatility asset classes like bonds, for example.
Yeah, it just depends on how much risk you want to have on your balance sheet, really.
Right. And also don't forget that selective in certain markets, you're also getting a very attractive yield. Asian bonds, for example, yields averaging 3.5 to 4%, for government bonds. So that's pretty attractive, I think.
Yeah. So, where do you look right now, and how are you positioning or advising people in this part of the world anyway, where they should be balancing their portfolios?
Well, I think, the diversification approach to us still makes an awful lot of sense. There's still a lot of uncertainty out there, so having a broadly based portfolio is sensible. Looking from an Asian fixed income perspective, as you mentioned earlier, we think that government bonds provides, the greater liquidity, the greater size of markets for positions in from a fixed income perspective.
Corporate debt, though, I mean, it's not as liquid, is it, as you just mentioned here? And so, what sort of demand do you look at, and, how well can you really trade all this?
Well, if you've mentioned, some of your commentators have mentioned that corporate bonds is a growing asset class. We would definitely concur with that, but it's still developing. We think there's a little bit of, additional growth momentum yet to make it a large enough asset class for core investment strategies. So
I think they'll become more popular, though, looking ahead.
Yeah, definitely. Corporate bonds are also an important asset class for investors. It provides an additional credit spread that investors are looking for. But in this environment where there is, I think, credit concerns, governments is still somewhere that I think makes a lot of sense for investors. Okay, so where's the bond issuance going to come from, and how much of these corporates actually require money at the moment too? Well, that's the thing. I think it's corporations at this time are not spoilt for choice when it comes to funding. So I think there will be a little bit of of challenge for corporations to really come out here and start issuing in size. In contrast, though, we see government issuances still continuing. Obviously, some further news and developments in China, for example. So we think that the government bond space will continue to grow further and provide good opportunities for investors going forward. Hon, thanks very much indeed for joining us. Hon Cheung there joining us to go through what's happening with the corporate bonds and the Asian corporate bond sphere as well.